Hey, Dad!
Yeah, what do you want?
I really want to go to college.
For the last time, I've already told you, we don't have money for college.
Oops, doesn't look like you were very prepared. How about let's try that again?
Hey, Dad! I really want to go to college.
Great idea, son. Certainly am glad that we saved money in your minor Roth IRA and your 529 account.
There we go, much better.
Aw, thanks, Dad. Hey everyone, welcome to the Real Money Pros. I'm Nick Daniels. Today we want to talk about two really tax-efficient accounts that you could set up for your children if you want to give them a leg up on their future. We're going to look at a minor Roth IRA, which is a great way to help your kids begin investing for retirement. And we're going to look at a 529 account, which is typically an account that's used to get tax-free growth for higher education. Okay, so first let's talk about a minor Roth IRA. And remember, your minor Roth IRA, it is actually intended to be used as a retirement account, hence individual retirement account. Now, what do you need to do in order to open up a minor Roth IRA for your child? Well, first of all, and this is the big kicker, which is the reason why many people don't, the child must have earned income. So maybe your child's 15 or 16, they've got their first part-time job. Now that they have earned income, you as the parent can open up a minor Roth IRA, be the custodian, so you're controlling that account, and your kid can now begin to either put their income into it, or as an incentive, they'll tell their child, hey, if you go get a part-time job, for every dollar that you make and put into this minor Roth IRA that I'm opening up, then I will give you $1 so that you can go spend it, put gas in the car, pay your auto insurance or things like that, right? But first of all, the rule is you have to have earned income. The next thing you have to know about a minor Roth IRA is the limit. The limit is 100% of earned income, or for 2024, the contribution limit of $7,000. For instance, I've got a son who's 18. He's worked part-time throughout the school year. He got his W-2 back. He's all excited. We're about to start filing taxes. He made $12,000 in 2023, and he was really proud of that. Could he put all $12,000 into his minor Roth IRA? No. The contribution limit is $7,000 or 100% of his earnings, whichever is the smaller amount. The other thing that we see parents taking advantage of minor Roth IRAs, let's say you're a small business owner. If you have a legitimate reason where you can be paying your child to work in the business, and that child is gonna get a W-2 statement, or even a 1099 for that matter, to show that they had earned income in the calendar year, then they can make contributions into this minor Roth IRA. But let's talk about a couple other uses of the minor Roth IRA that many people aren't aware of. When that child turns, and it depends on the state and it depends on the custodian, but when they turn anywhere between the ages of 18 to 21, this account gets converted to a normal Roth IRA. That just means that now that that child is an adult, you as the parent no longer have control or custody of the account because they're an adult now. They get to control it. It's a normal Roth IRA. But some of the things that you can use a Roth IRA for, if the account is at least 5 years old, you can actually pull out contributions penalty-free. Which leads into the 529 accounts. Why would you open up a 529 account for your child? You want to try to get tax-free growth for a very specific purpose, and that is for education. But it's not just limited to tuition. The living expenses could be reimbursed out of this 529. Let's say they had to buy a new laptop. Let's say that they had to buy a meal plan at their university. And again, if you're starting it when the child is a baby, you have 18, 19 years of potential tax-free growth that you can use that account for education. Well, what if my kid's not gonna go to college? Under Secure Act 2.0, it allows for unused funds can now be rolled over to a Roth IRA. This is huge. So let's say you have a 529 account for your child and they've finished going through college and there's still some money left over, the unused funds can be rolled into a Roth IRA as long as the beneficiary name of the 529 account matches up with the name on the Roth IRA. Now, there are a couple rules. The account needs to be at least 15 years old. The sooner you start the 529 account for your child, the better. And then there is a limit, right? You're only allowed to roll over up to $35,000 in total. Now, obviously, the contribution limits for a Roth IRA in 2024, the limit is $7,000. So in this case, if you had $35,000 left over, it's gonna take you 5 years to do the rollover because you can only do $7,000 at a time. Finally, the last benefit that I want to talk about with a 529, and this is a state-by-state case, but there are many states that give you a state tax deduction for making contributions into a 529. It's not on the federal level. You put $5,000 into a 529, it's not gonna lower your federal income taxes. But in the state of Idaho, for example, a single filer can put up to $6,000 into a 529 account and reduce their state income tax liability by $6,000. For married couples, that number doubles in Idaho. You could put $12,000 into a 529 account and reduce your state income tax by $12,000. So, your minor Roth IRA and your 529 accounts. Two great tax-efficient tools to help you give your kids a head start, whether it's for retirement or higher education. The choice is yours.